Hi everyone, hope you're all doing good. So, in this particular session, we are going to discuss about the difference between price action trading and technical indicators. So, we will try to understand why price action trading is much better than indicators, and we'll also see what does it takes to be a successful price action trader. So, make sure to watch the video till the end. And also hit on the notification icon, click on the subscribe button. So in case if you want to know more about me, more about my background and more about my trading style, visit my website, that is www.tradingcoach.co.in. So without wasting any further time, let us get started. Alright, so first of all, let us start with some of the key points on price action trading. So first of all, price action trading relies on reading the price chart and recognizing the patterns. So when you do price action trading, you'll be trying to read the price chart. You'll try to get the information from the price chart and you'll try to recognize some kind of patterns or setups. So apart from that, when you do price action trading, it also helps you to understand the logic behind the price movement. So price action trading helps us to understand what's happening behind the scenes, what's going on behind the scenes. And most of the professional price action traders, they often don't use any indicators, and even if they do use some indicators, they give very less emphasis on them. Alright, if you have seen the chart analysis of some price action traders, you might see most of them will try to trade on the naked charts, and even if some of them try to trade with the help of indicators, they'll keep the indicators to a very less degree. They don't use much indicators. So you'll just see one or two indicators on their price chart. So most of the professional price action traders, they don't use indicators. And apart from that, price action trading requires a consistent practice to be a successful price action trader. So practice is essential to be a successful price action trader. All right. As we have seen some key points on price action trading, now let us look at some of the key points related to technical indicators. So technical indicators relies on mathematical calculation and finding signals, right? So when you use technical indicators, whether it is stochastic or RSI or moving average, it focuses more on identifying the signals on the price chart. All right. And apart from that, indicators are often derived from the price. Okay, they are just a substitute of the price. Hence, they are a little lagging compared to price action. Alright. So, just because indicators are lagging doesn't mean they are useless. So, you need to keep in mind, many people think indicators are lagging and the price action is a leading, price action gives us a leading information. Doesn't mean that indicators are actually useless. So, indicators are derived from the price, hence they have a kind of a lagging nature. That's it. And also, the trading strategies which we can design by using indicators, they can be easily back tested. Unlike price action techniques, which you need to forward test it, trading strategies that are designed with the help of indicators can be easily back tested. Okay. And also, the most important advantage of indicators are that the indicators are very easy to implement. Alright, so if you're a beginner, if you're just getting started in trading, indicators are pretty easy to implement in your trading process. Alright, it's very simple, it's super simple to be honest. Right, so far we have seen both the key points about price action trading as well as technical indicators. So right now what I'm going to do is I'm going to show you the charts. I'm going to show you the actual charts and I'm going to highlight the difference between price action trading as well as the technical indicator based systematic trading. So we will directly look at some price charts and we will try to clarify the difference between both, and we'll also discuss what are the advantages of using technical indicators and the advantages of using price action trading. So I will show you some of the charts. Let's have a look. So let us first start by looking at the the advantages and disadvantages of using indicators. So let us look at all these important facts. So this is the price chart of HDFC Asset Management Company. As you can see the time frame, this is the 1-day chart. So in this particular chart, I have applied a Bollinger Band, and also I have used a stochastic oscillator just to highlight the important facts related to technical indicators. So the first and fundamental fact about technical indicators is that it focuses just on finding the signals, right? So what happens is, if you are using something like stochastic, or if you are using something like Bollinger Band, all you have to do is just buy and sell. So whenever the indicator tells you to buy, you will just buy it, and whenever the indicator tells you to sell, you will just sell it. When it comes to something like stochastic, all you have to do is you have to just look for overbought as well as the oversold signals. So whenever the prices are oversold, you are going to buy the stock or buy the asset or buy the commodity or buy the cryptocurrency, whichever instrument you are trading. Likewise, whenever you get the overbought signal, you are going to sell the stock or sell the cryptocurrency, sell the commodity, whatever instrument you are trading at. So it just focuses only on finding the signals. And the second most important point when it comes to indicators is that it does not consider the market behavior. All right, it doesn't care about the market behavior. The indicators doesn't care whether the prices are actually in a trend, or whether the prices are actually in a range, or it doesn't look at all this stuff. All it does is it just does a couple of calculations and just gives the signal. So as you can see, it doesn't consider the market shift. All right, even though some of the indicators does show us some signals of market shift, some signals of changing market behavior, but most of the indicators doesn't care. They just do the calculation, and they just throw you a couple of buying and selling signals. All you have to do is just follow the signals most of the time. Okay, and the third important point is indicators are super easy to apply. So all you have to do is just apply the indicator, and you just have to follow them. You don't have to worry much about doing the calculations, drawing the lines, and you don't have to do all those kind of the subjective things when it comes to technical analysis. So they're just easy to apply. All you have to do is learn a few things about indicators, just apply it on the chart and simply follow it. And here is the most important drawback when it comes to using indicators, and something I personally feel very, very uncomfortable. Most of the indicators have very low probability. So if I'm taking somewhere around 100 trades, if I take 100 trades with the help of Bollinger Band, or if I take 100 trades with the help of something like stochastic oscillator, nearly out of those 100 trades, I would like to say only we can say only around 40 to 50 trades usually works out. And most of the trades are likely to hit the stop loss or likely to fail. So they have a very low probability, to be fair. Most of the indicators have a probability of somewhere around 50%, 50 to 55%. So if we have back tested a couple of indicators, if we have actually tested or researched on a few indicators, you will understand what I'm talking about, right? And yes, so apart from the disadvantage of low probability, one of the important advantage of indicator is that indicators are useful when it comes to back testing. So before you try to use the indicator, or before you try to apply it in the live market, you don't have to really worry about risking your real money. You can just back test it first. You can use the historical data to understand the success rate. right? You can look at the historical signals. You can try to compute the, the historical signals given by the indicator, and you can try to check the success rate, the probability, everything by just using, the back testing stuff. All right. So these are some of the key points. These are some of the advantages and disadvantages of the indicators. So as we have discussed about indicators, let us look at some of the advantages and disadvantages of price action trading. All right. So on the same HDFC asset management one-day chart, I have did a couple of price action analysis. As you can see the chart. So let us look at some of the key facts about price action trading, and let us see how it differs from indicators. So first of all, when it comes to price action trading, we'll be looking for patterns on the price, right? So if you look at all these yellow color boxes over here, so all these yellow color boxes are patterns. All right, the patterns that is caused by the price behavior. So when we do price action trading, we'll be looking for these type of patterns, and we will try to trade these type of patterns. All right. And the second most important point is, when it comes to price action trading, we will try to understand the logic behind the price movement. Say for example, if I try to study the price action here, if you look at this particular point, right, from this point to this point, I can see a very sharp sell-off. So this particular sell-off is giving me an indication that sellers are trying to take control of the market prices. So if you look at this particular sell-off, if you compare this with the previous sell-off or the corrections, you can notice that this specific sell-off is very sharp, right? Very sharp and very large. And right after this particular sell-off, you can see that, the complete market conditions changed. So from an uptrend, the market started to move more like a sideways movement, right? It went on to become from an uptrend to a downward channel. We can clearly see that. Okay. So apart from that, the third point is price action requires practice and observation skill. So if you can notice the chart, all these pattern recognition, all this identifying of patterns, all this trying to read the price movement, trying to understand the sentiment behind the price. So all this requires practice and a very good observation skill. So to be a successful price action trader, you need to do a lot of practice, and also you should develop a very good observation skill. All right. And here is my favorite point, and this is one of the major reason why I am a devoted price action trader. The reason is price action always gives you a high probability. All right. So when compared to indicators or when compared to any other mechanical systems, the probability of price action is very good, and also it's a very effective way to trade the markets. All right. Speaking from my experience, perhaps, compared to what I have done with indicators, and comparing to that, the returns which I have made with price action is much better, much better. All right. So here is one of the major disadvantage which I feel is there with price action trading. That is, you can only do forward testing. All right. So when it comes to identifying the probability, or when you want to find out the accuracy of price action techniques, you cannot simply back test them, or you cannot simply look at the historical signals and you cannot come to a conclusion. You have to apply it on the actual account. You need to find the success rate by trading them in the real market, either on a demo account or on a live account. All right, whether you are a commodity trader or whether you are a currency trader or whether you are a stock trader, it doesn't matter. If you want to be, using a proper price action technique, you need to forward test them in the live market, right? Back testing doesn't work in price action, because when you back test it, right, you may not be able to identify proper patterns. Okay. So these are some of the advantages and disadvantages of price action trading. And now what we can do is, let us try to compare both. Let us try to compare the advantages and disadvantages of both price action trading as well as the indicators. Let us do that.